afternoon. Thank you for joining us today for an update with Horizon Energy. Horizon trades under the ticker symbol on the TSX Venture Exchange, HPL, and on the Frankfurt and Tradegate Exchange under the symbol HPM. Given it's been a number of months since our initial webinar, I would think it would be prudent to revisit the background of Horizon and the subsequent milestones the company has made. There'll be a question for Q&A. Please enter your questions in the Q&A box. Welcome, Roger.
Great. Thanks very much, Jessica, and good afternoon to everybody out there. We're going to go through the investment deck fairly quickly. I think a lot of you are already familiar with the story in some way, shape, or form, and I want to give you an update on basically what we've been doing since the last update we provided. Horizon is a publicly listed company on the TSX-V. We have assets in Poland, 2 licenses to be specific. We have a fairly experienced management team. We all have over 40 years experience in the business directly, mostly international, and some site-specific experience in Poland and in Europe, of course. Our assets are in a environmental, the macro environment in Poland is fantastic, which I'm going to show you in a few minutes, and that's basically why we're in Poland. If you take anything away from our presentation today, I want you to take away that we're a grossly undervalued stock with a fantastic asset and a strong country, which is Poland, that has very strong gas prices and is desperate for natural gas. So just a quick overview. I'm going to be talking about the assets in a little bit more detail, but basically the Lachowice gas discovery is 2P reserves of 35 BCF worth about 85 million US, so over 100 million Canadian. And our market value, our market cap right now is less than 10 million. So, the obvious value equation here is we're a $10 million company with a $100 million asset. And it's just the market hasn't picked up on that yet. And we're about to kick off our operations next month, as a matter of fact. And that's when the market should start we should be getting some recognition in the market for what we actually have.
Sorry about saying Horizon Energy, by the way. Horizon Petroleum. I can think it was energy. Yes, I don't know why I said Horizon Energy.
Sorry, Horizon Petroleum.
Yes, Horizon Petroleum is with us today.
HPL.
HPL.
So that only took me 10 minutes to make, or 10 seconds to make my first gaffe. So sorry about that. Thank you, Jessica.
No, I made it, and I was correcting myself.
Oh, you did? Oh, I thought I did. Okay. All right. Well, we're off and running here. So we have a strategy to basically acquire conventional natural gas assets in Europe, and the reason why we like Europe is because Europe really doesn't have a fantastic gas supply, domestic gas supply. So they're importing gas from Algeria, they're importing gas from Qatar, they're importing gas from the United States, all in LNG and pipelines, importing gas from Norway. So they need gas all across Europe. And so that's why the gas prices are so high in Europe. We like to mitigate risk, typically on large projects, by inviting partners, either industry or financial partners, to help fund a good chunk of the development program, which you'll see in a few minutes. And we have a management team and a board with a strong track record. David Winter is not able to be with us today, but he's our CEO. He's a geologist. Our CFO is Ian Habke. He's a chartered accountant. And I'm the engineer of the group. So we're a bit of a bad cliche, the three of us. But I think that makes for a fun team. Pardon me?
You're the most fun.
Well, I'm the engineer.
That's right. That's right.
So yeah, but we bring different skill sets to the team, and they mesh actually quite well. We've been at this now for a few years while we've been getting these assets in Poland, and it's been really encouraging how well the team has meshed. I want to also mention that we have a general manager in Poland. It's Dr. Cezary Filipovich, who's got about 45 years of experience. Pretty much all in Poland. He worked for the Polish oil and gas company back in the Soviet days and has transformed along with the country into free market, a capitalist country, if you like. We're thrilled to have him. He's very well connected at all levels of government, both regional and federal. He also knows a lot of people in the national oil company, Orlen. And with him, he has brought a strong operations team of Polish folks. We have an operations manager, we have a drilling manager, we have a geophysicist and geologist, all located in Poland. And the beauty of having that is they know the landscape, they know the people, and what we're finding is we're getting approvals for licenses and permits and things like that, either right on time or even ahead of time. So that's a really big plus for us, is the team on the ground. I won't dwell on this too much, but basically this is just a snapshot of what's happening in Europe, which I've kind of already described. I'd rather dwell a little bit more on the next slide, which is the natural gas fundamentals in Poland. On the right, you see this graph, and you have a green solid line and a green dotted line. The green solid line is the production of energy. This is all forms of energy in Poland. And the dashed green line is the consumption of energy in Poland. And so, for the first time, Poland is now consuming twice as much as it's producing in terms of energy. The brown line, if you like, it looks kind of brown on my screen, is it's coal production, because this is what Poland has been using to generate power through the years. It had a very, very strong coal industry. And what you're seeing is that the production of coal has been dropping year after year after year. And the reason for that is basically the reserves have all been mined out, and everything that's left is a lot deeper and more expensive. Also, what you're seeing is their consumption of coal is going down as they bring on renewables. Also, they're using more natural gas that is brought in from outside the country. At the bottom line is the red line, which shows their natural gas production versus their natural gas consumption. And you can see that their gas production has been going down. And just as the same with the green curve, the consumption is going up. So you have the perfect storm here. And to cap all of this off, the Russians invade Ukraine, and the Polish government outlaws the import of Russian gas. And the thing about Russian gas, it used to supply over 40% of the Polish market, and now it's basically out. So they have a huge gas deficit that they're trying to make up via LNG, which is expensive, and also through an interconnector from Norwegian North Sea through Denmark. This is a bit of a nightmare for the Polish government, in a way that they are now starved for natural gas, and so they're very keen on any domestic gas that we can bring on stream, and they've been extremely cooperative with us. The other aspect about when you're burning coal, especially in a place like Europe, you end up having to pay for carbon tax credits, essentially. And that cost last year in 2024, that cost the Polish government about 6 billion euro, which is equivalent to about 10 billion Canadian dollars. And if they had been able to, that's how much, or they paid a lot more than they could have saved that much if, instead of burning coal, they could be burning natural gas to generate their power. So, I mean, it's a huge economic driver as well to get off the coal habit in Poland. So, and all those credits get paid by the Polish people in terms of electrical prices. It adds
Their
about 4
prices would
cents.
come down like by 50% if they.
That's right.
Yeah.
Yeah, you pay a big carbon tax. It is built into their electrical price. So it's a pretty big deal. So the macro environment, and why I'm dwelling on this a little bit, is because the macro environment in Poland is so good, and gas prices in Poland reflect that. Currently, gas prices, and we see you can sign on. We give you the website there to sign on, and you can actually see spot price for peak gas or for base gas, and currently it's about $13.50 US an MCF. So that's about 5 to 10 times what it's been here in North America. And it's really what drives an awful lot of the domestic gas projects that people are trying to get on now, and in particular us, as you'll see here. Maybe a quick overview of the assets we have. I'm going to show you a map in a minute, but basically we have two concessions. They're Bielsko-Biala and Cheshin, and inside the Bielsko-Biala concession, there's an identified gas discovery already that called Lachowice. It has 197 BCF of 2P and 2C, 2P reserves and 2C risk contingent resources, with a before tax value of over 500 million US. So significant. It's over a TCF of gas in place, and this is located right in the heart of Europe, if you can believe it. It was discovered back in the mid 80s, and it was drilled with another 6 wells in the late 80s and early to mid 90s, but has never been brought on stream due to various political issues, COVID issues, and companies that had control of the asset were more focused on the shale gas boom that existed in Poland back in the about 2013, 2014, 2015, that was a bit of a flop. And a lot of those the companies ended up leaving Poland because they had invested so heavily in shale gas, and they left a lot of the conventional gas resources and reserves behind. And Lachowice is exactly that. The Cheshin concession is a shallow. It's like Lachowice is a little bit deep. It's about 3,000 meters in depth. Cheshin is just the opposite. It's very shallow. Great reservoirs in terms of reservoir parameters like porosity and permeability and those kind of technical things. And you find gas at 300 to 700 meters well depth, but you don't find a lot for each well. You might find a BCF. Half to 1 BCF, but you can drill and tie in a well for less than $1 million. So that's a nice bookend to have to the Lachowice discovery, which has a lot of gas per well, but everything is a little bit more expensive. And this area has been chronically underexplored since the Soviets drilled it up back in the post-war, if you like. There hasn't been a well drilled, for example, in the Cheshin permit since 1993. Here you have a map showing the two concessions. We're down in the southwest corner of Poland. So Czechia, the Czech border is we're bolted onto the Czech border to the west, and the Slovakian border is just 10 kilometers to the south of the Lachowice gas field. The other thing I want to draw your attention here is the red lines on this map are the high pressure gas system that infrastructure that's in place, and it has capacity. And we've been in discussions already with both PSG and Gas Network, which is the transmission system operator owned by the government, the state-owned company Orlen, but they have capacity and they're very interested in cooperating with us to get this gas on production as soon as possible. It's a total of about 1,130 square kilometers, so fairly large. Bielsko-Biala is about 800 square kilometers, and Cheshin makes up the balance, about 350.
You have all permitting in place then, ready to go.
We have good.
All permitting in place?
Yes, the permits are ours. The licenses are ours. We were awarded the licenses in November of last year in 2024. We'd actually applied for them back in 2019, but COVID came along and everybody in the Polish government started working from home and nothing happened. They didn't come back to work until August, actually, of last year. So it's been everything went very, very slow because of COVID. But we have the permits now, which is great, and we have there are 4 or 5 year permit length. They're exploration licenses, but the transition into production is basically seamless. We have a financing strategy in place. A lot of people are curious how a $10 million company is going to actually finance this. We're going to be doing an initial raise sometime in the near future for up to 10 million US, which will take care of our initial work program on both Lachowice and also on the Chechen permit. And we're also actively looking for a strategic partner to fund a promoted portion of the Lachowice full field development, which I'll describe, but it's, a development that requires about 50 to 55 million US to get it to generate free cash flow. So we're actively looking for partners for that. We've hired a company out of London called Lab Energy Advisors. We've already been signing NDAs, I can tell you, for companies that are interested in learning more about this asset. And we'll be starting management presentations to interested parties within the next 1 to 2 weeks. I think I'll just keep on going on. This is I'm going to come back now to Lachowice. Lachowice is this is a map of the top of the structure. Really, the only thing I want you to take away from this is that these black lines are like faults, so it's kind of a broken up structure, and so they're compartments. There have been 7 wells drilled into various compartments in this reservoir. That area you see there is about 45 square kilometers in size. And there have been 7 wells drilled in various compartments, and every well that's been drilled has found gas, very little water to speak of. And 3 of the wells actually have commercial gas rates ranging from about 2.5 up to almost 9 million a day of cubic feet a day of gas. The other great thing about this, compared to a lot of other fields in Poland, is this is very high methane gas. So it's 94% methane, basically pipeline ready gas, with no H2S, very little CO2. The gas meets the spec that's required to get into the pipeline system. So when we're talking about development, to process this gas, all we have to do is basically remove some of the condensate, and then dehydrate the gas, which is a very simple operation, and we're ready to go right into the pipeline.
So you're just going to be re-entering one of the Lachowice 7, right?
Yep, I'll get into that, but I don't know if you can see my cursor, but here is Lachowice 7 well that this is the well that flowed 9 million a day. So this is already established. It was drilled back in the mid-90s, so it's one of the more recent wells. It was suspended properly. It's the only well we can actually get back into. But I'll describe the workover in a minute in a little more detail. But basically, all we have to do is go rebuild the wellhead and re-enter that well by drilling out a couple of plugs that they left to suspend the well properly and safely. And then we'll be able to re-stimulate and retest that well and prove up the gas rates.
And what do you use, like an acid for frac kind of thing? Is that what you?
Yeah, because this is a carbonate, a limestone, fractured limestone reservoir, the stimulation required is actually quite simple. It's just a self-diverted acid job that we're planning to pump. It was acidized before when they tested 9 million a day, but it was just a very simple acid job that wouldn't have stimulated very much of the reservoir. We have about 150-meter column of gas that we plan to reperforate and get access to on this wellbore. So it's a substantial amount of gas. It's about our independent reserve evaluator believes there's about 15 BCF of gas that we can recover just from that one well alone. So not quite a half of the 2P reserves will come out of the L7 well. But very simple operation in the field in terms of acidization. I think another thing to talk about quickly is because we're in Poland, there's a fairly well-developed service infrastructure. We have a choice of, I think, 3 or 4 different drilling companies. There's the national drilling company, and then there's a couple of other 3 private companies that we can hire. There are pumping services. Basically, everything we need for our workover and everything we need for drilling our wells is in Poland itself, and we have the freedom to go out in other countries in Europe, such as Hungary or Romania, which have very well established oil field services industries as well. So, and nothing's that far away, especially if you're used to operations in Canada. Everything is within, they think 1,000 kilometers is a long ways. And in the oil field, that's not very far to move equipment. Just a quick snapshot of the reserves. I already talked about this, but just it gives you an idea of the size. This is only for Lachowice. Okay, this is not for the rest of the permit, and this is not for the Chechen permit. This is only the Lachowice gas accumulation gas field. 34.5 Bs of 2P reserves, 163 Bs of 2C contingent resources, and then another 120 BCF of prospective resources. These are all on risk basis, of course. And you can see the net present values on the right side.
And so when you drill, let's say you finish the workover at Lachowice 7, how will that change your 2P into 1P? Like, how many reserves do you get per well?
For Lachowice 7, we'll be getting about 14 BCF that will switch from 2P to 1P as soon as we get it on production. So we'll get an automatic, we'll get a value pump, and the big advantage, that's one of the big advantages of going in and doing the work over at Lachowice 7 is that we convert the 2P into 1P reserves, which banks then will recognize and provide us funding if we need it in terms of an RBL, reserve baseline loan. And also it'll get the well on production and give us a little bit more information in terms of how well these wells will continue to produce. This is the Bielsko-Biala Concession, and down the bottom right-hand corner, you see the Lachowice gas accumulation, and that's a fair representation in terms of scale, the size of the field compared to the size of the total concession. Again, on this map, what you'll see a bunch of these gray lines. These gray lines are all the electric lines, the power lines that we can actually, if we can generate power using the gas, we can tie into those power lines. And the red lines are the gas, is the high pressure gas system that we can also tie into. So we have a couple of options in how to monetize our gas. What we see here is probably the most prudent way to move forward on Lachowice is to have a 2-phase development. The first phase would be to re-enter the L7 well, as Jessica pointed out, which you can see on the map. Here's the L7 well. And what we plan to do is just rebuild the wellhead, put a new wellhead on, and drill out a couple of one cement plug and one mechanical plug. Reperforate the zone of interest that has already tested gas at rates of up to 9 million a day, and re-acidize. And then retest it just to confirm that, yes, the gas is there as per all the reports that we have from the 1990s. Once we have that confirmed, then of course the next stage is to monetize the gas and start selling either power or natural gas from that well. We have we've done a survey of we've hired a Polish electrical contracting company to go out and find out, how much capacity is there in the electrical networks. And we found there's 2 megawatts of capacity 200 meters away. There's actually a power line that used to go right across the L7 line. And if you follow that down the hill about 200 meters, you'll find the transformer. And we've confirmed we can actually sell power into that site. There's another site less than a kilometer away in the opposite direction to the northeast that has capacity for 4 megawatts. We've also been in discussion with PSG, which is the local gas distributor, and this red line here that I'm pointing at, they operate this line, and they have a fleet of CNG, compressed natural gas trucks, located about 50 kilometers away in a big city called Krakow, which a lot of you probably have heard of. And we're in discussions with them about them coming and actually picking up gas right from our well site at L7. And then they would take the gas and put it into their system wherever it is they need it. And so that we'd be selling gas right from the well.
And so then you get cash flow right away, right? You don't have to bother with the pipeline, basically.
That's right.
Yeah.
Yeah, CNG is great because the facility that is required is really just a simple separation and dehy facility that I described, and then they can pick up directly from the outlet of that facility. Gas to power is also relatively quick, other than the fact that you need to find gas generators, which we actually have found some existing ones in Poland already that are available to us to buy, that match up perfectly with the 2 megawatt site demand. And so that's something that we continue to actively pursue as well. And my personal view is what we're going to end up is with a bit of we're going to be selling gas by truck, CNG, up to 1.5 million a day, and we're going to be selling power as well at about 2 megawatts. When we do this, when we get, like, we're expecting about 1 million to 1.5 million a day from the L7 well, and that'll generate revenues at today's prices of around $7 million and cash flows of about $4 or $5 million US per year. And the electrical prices are so high also in Poland that if we sell electricity or we sell natural gas, we make about the same amount, whether we sell power or we sell gas. It ends up being just about the same because electrical prices are so much higher than natural gas prices, but it takes some, natural gas to generate the power, and by the time you derate everything for efficiencies, you basically get the same amount. So we're looking at annual cash flows of about $5 million a year of a revenue stream of about $7 million. And that's our first phase. And then after that, as soon as we get that going, we'll be moving directly into phase 2 development, which will be to start drilling wells and building a 40 million a day gas plant and a pipeline. And the pipeline, as you can see, our gas plant is going to be located very close to the L7. We've already started to rezone the land for that large gas plant. And we're in discussions with both the mayor, but also the owners of the land. So the application for rezoning that is already started. And we'll then be running a pipeline, which is about 10 miles or 15, 16 kilometers over to this tie-in point here into this high pressure system. It's a big pipeline. It's like 12 inches, so carry a lot of gas. And that's what we plan to do.
Okay. So obviously, I mean, depending on how robust these wells are, could you end up doing everything with CNG and electrical?
No.
Okay.
No, we're going to be producing way too much gas to go the CNG route. You can only really truck about 1.5 million a day in CNG.
Okay.
Practically, these are not big roads and whatnot, and so you can't have great big B train trucks and whatnot. So, and electricity, if we're generating 40 million a day, there isn't capacity in the network to take that nearby. So the pipeline will be the fastest route and a gas processing plant.
And what's the
So
cost of that pipeline?
that pipeline and the plant together, well, the pipeline's about 10 million and the plant is going to be about 15 million. So about 25 million all in for the 40 million a day gas plant and pipeline.
Okay.
Yeah, 25 million. And then each well that we drill is going to be about 12 million US per well. So and I'll go through that in just a couple of minutes, but that's basically where we come up with the $50 million to get us to free cash flow. That gets us a gas plant, gets us a tie-in, it gets us 2 wells on production, and each well is expected to produce about 10 to 15 million a day, depending on which well we're talking about and which part of the reservoir. But we'll be generating cash flow in as soon as we have the gas plant and the pipeline built. And I'll just maybe here it's helpful to go through just what we're planning to do. So in 2025, it's a well re-entry. We don't have to drill anything other than the plug on surface. So it's basically go into an existing well that's already tested. We know the gas is there based on all the data that we've been given by the government and by the former operator. So we re-enter that well, we re-perforate it, we pump a modern type of acid stimulation, and then we production test it. And all that's going to happen in October and November. We will start building the location and access road at the end of this month, and so it'll be ready for us by the end of September to then move a rig in to do the actual re-entry. It's just a workover rig, so it's not a drilling rig, but we have already got all the permits in place for that re-entry. We have an environmental permit, which takes a little bit to get, but we actually made application for it before we even got the licenses last year. So we've received that. We've got signed contracts with all the landowners. And they've received payment already for us to have access to the land. We have our the other environmental permits like waste management and noise permits and all these kind of things. So basically, we're shovel ready to start that work over. We have ordered all of our long lead items such as tubing and the wellhead, and already made substantial deposits on those. And those are all coming in the middle of September. So we'll be ready to go early October with this work over. In 2026, then, as soon as we finish the test, we'll be looking to build and commission an early production facility. And really, the front end of that is the same whether we sell CNG or we sell power. And so we'll be, as soon as we have the test off the well, then we'll be able to have more serious discussions with the gas purchasing company, which is PSG. And also with the electrical company, Toron. But we know there's capacity already. We just, at that stage, we can actually start to reserve capacity and get contracts negotiated and signed for the purchase of power and natural gas. And as I said, that'll generate about $5 million US a year in cash flow at current prices. And then the full field development will actually, as I mentioned, we've already started on that. We identified the piece of land that is well away from all the residents. It's behind a forest in a farmer's field that is just used for pasture. And so we've applied with the local municipality to rezone that land and have had discussions already with the landowner who's quite keen to rent it for us, rent it to us for a long lease period. In 2026, then next year, we'll move forward and acquire and process a 3D seismic survey because we really need to understand what the subsurface looks like to know where to place our wells. And we'll drill a twin well of the L7 well. It'll be a horizontal well or near horizontal well. And we'll also twin one of the other discovery wells, which was the original well, the L1 well, which is, about 4 or 5 kilometers away. But it flowed rates as high as 5.5 million a day. So we feel very confident that we can just go back in and twin these wells and get great rates, very low risk. And we'll use that then as the basis. That'll be the initial feed into our large gas plant. And then after that, we just start to drill about 2 to 3 wells a year to fill the facility up to its 40 million a day capacity.
And do you want to show that on the model?
Yeah.
Okay.
I can. So this is the model output for capital and for cash flow, expected cash flow. And what you can see from here, about the middle of the line here, what you can see here is that we actually start generating free cash flow from the initial development in 2026, but then on the larger significant phase 2 development, we start generating cash flow in 2027 once we get on production.
Free cash flow. Yeah.
Free cash flow. And by the time we get up to 40 million a day, we're generating over $100 million US a year in free cash flow.
That's pretty substantial ramp. Yeah.
Yeah, it's a big ramp, but these are crazy good wells. This is basically using the same technology as we've been using in Canada. Using
for years.
It's analogous to an awful lot of the foothills plays that we already have experience with in Western Canada. I have experience in Europe with similar naturally fractured plays, as does David, our CEO. And so the kind of well rates that we're looking at are not, they're not crazy. It's about 10 to 15 million a day, which is what you see in Western Canada when you drill these kind of plays in Western Canada. The big difference between us and a lot of the plays in Western Canada is that we get 13, 14, 15 bucks an MCF US, and in Western Canada we're getting about 2 Canadian for gas, sometimes 3 Canadian.
Sometimes 0.
Sometimes you have to give it away. It's just a carrier for the liquid. Yeah, it's crazy. And but it's a completely different game in Europe and in particular in Poland. So the other thing that I haven't talked about at all is the Chechen block. But I think what I want you to take away from this today is that, Lachowice is really exciting. It's big, a TCF of gas in place plus already 34 Bs of gas identified just in 2P reserves, 200 in total, including resources. Chechen is more like 10 BCF of field kind of thing, but you can see all of these red blobs on here. These are fields on the Czech side, and geology often follows a trend. And so you see that all of these gas fields all trend directly right into our Chechen permit here. And in fact, in our Chechen permit, there are 2 fields that have been discovered already. The Debaviec Statsky field and this Pogorsh field here. And this one's produced about 8 BCF to date, and this has produced about 2, but they were discovered like back in the 1940s and 1950s. They basically drilled and they were shocked at some of the gas rates they got. There are other wells here that have been drilled, tested gas, and never been put on stream. So we've been doing a lot of technical work, and we'll be picking up the operational side to get some wells drilled late next year here. So that this is it's really great to have another concession, which is Chechen, that has the opposite kind of field development is what we require in Lachowice, because we can do Chechen without an awful lot of money. We can do shallow wells. Like I said, about $1 million a day. A well in the Lachowice field is going to cost about $12 million per well. So, but we get about a tenth of the amount of gas out of a Lachowice well. That's what we get in Cheshire. So instead of 12 BCF, we get about a BCF in Cheshire. But it's the kind of thing that we can get after and do fairly quickly, and that'll add to the cash flow stream.
This was me to kind of tighten things up here. So you basically are in a position to drill. You have your we're still waiting on the EPA approval. Are we not on the electricity?
We've applied for the early production facility EPA, the environmental permit, and we expect to get that early next year. Probably first quarter of next year is how long it'll take us to get it, and then we'll move to building right away. We can get a construction permit really quickly. We've already, in terms of the workover, we've already solicited quotations and pricing for all of the major services that we require for that recompletion. We have the surface land, as I mentioned, so all of that's in place. We're shovel ready. As soon as we complete our financing, we'll be moving ahead the same week to get going in the field to build the location and the surface access road.
And the government's been pretty good to deal with, right? Like you've been able to get permitting and stuff. They're a little faster this time than
we've been pleasantly surprised how fast the permits have come through, and I think that's two things. One is the Polish government is very motivated, of course, to get domestic gas on, and the second thing, obviously, is having the right team on the ground. We have people in Krakow, which is where the mining authority is, and our people there know all the the people you have to know to get permits, and so at least they can track them. I would say one thing about Polish bureaucracy: it's not very fast, but it's very transparent. It's very direct and straightforward, which is great to work with, and you basically know when you're going to get permits, and people can tell you, yes, everything is fine, or everything isn't quite fine, and you need to, add things up. So the permit system works really well in Poland, and we've been very encouraged so far.
Awesome. Anything that we've forgotten? I think we've hit all the high points. And did anyone have any questions from the audience? No one's putting up their little hand.
This is just in graphical form. What we're expecting in terms of capex, production, and EBITDA, and you can see it. The ramp comes as early as 2026, which is only half a year away. We'll be on production with our EPF we expect to be on production by the end of Q2 of next year, generating cash.
That's great. That's great. And as far as JV partners, have you been in talks with anyone, or is there a lot?
Yes. We have. We're on a couple of tracks, actually, in terms of finding a JV partner for the Lachowice development in particular. There are a couple of mid and downstream companies in Europe that are interested in buying molecules in the ground now, just as a natural hedge to the rest of their business. One is actually Polish, and they approached us. So that's one track where we're talking directly to some of these companies, and we'd expect them to be more of a financial partner, and also provide us the takeaway. Their interest is in actually buying the gas off us once we get it to surface. The other route that we're on is with a company called Lab Energy Partners in London, and they are actively marketing our opportunity right now. And as I said, we've already signed a few confidentiality agreements with various companies, and they have access to our data room, a virtual data room, and we'll be giving them management presentations later this month. So we're very active on that front. We're very optimistic with the kind of interest that's been shown so far that we'll be able to secure a partner this year.
Fantastic.
And Yeah, that's mainly for the larger development, but if somebody wants to come in early and participate in the EPF, the early production facility associated with Lachowice 7, we'd entertain that as well.
Okay, great. Well, I think that gives us a pretty good rundown. And like, I think you were just going to, the break-even price is $2 an MCF, right?
Yeah, this is the economics are so robust on this project. Yeah, we need $2 gas price to break even, and we're sitting around 13.5 right now, 14. Even reserves per well, the reserve estimator came back with about, depending on where we drill, 10 to 15 BCF a well, but we actually break even at 1.2 BCF. So that's 10% of what we're expecting to get per well. Economics are very, very robust, and there's way more upside than downside in this play. And I just think maybe the last point is that we're also a very clean company. Yeah, we're a very clean company. We have 58 million shares outstanding, fully diluted, only 59. You can see the warrants, the warrant table down below. Most of our warrants are in at 20 and 30 cents, and we're currently trading about 10 cents last time I looked. There's not a huge overhang in the market right now in terms of warrants either. So very clean.
Okay, great. Okay,
that's it.
Yes, I think we're good. Thanks everyone for joining us this afternoon. And if you have any questions, you can email me or at jessica@adcap.ca. I'm happy to also set you up with the company if you wanted a direct one-on-one. Thanks so much for your time, Roger.
No, thank you, Jessica. Much appreciated. And thanks everybody else for signing in. And yeah, very happy to take questions or talk further about this.